Let's go.
Super. Hello, everybody, once again. You might not know, but I've already said hi, but apparently we weren't live. So here we go again. I'm practicing my highs in this world of ChatGPT, artificial intelligence, and other things. But this is a live person talking to you. My name is Radu Palamariu. Some of you may know me, Managing Director of Alcott Global. I'm here more or less to set the scene. I'm just here for 2 minutes. Then I'll give the floor to Shub for a very interesting panel that we have prepared for you on a topic that I think interests a lot of you. This is part of a larger initiative. At Alcott Global, as you know, we do executive search in supply chain, but Shub has worked hard to build our learning solutions. So we've built an online academy. We have now 55 courses going live next, basically this week already. We have this type of initiatives where we bring super smart people like the panel tonight to share insights on the latest developments in supply chain, as well as we have Chain Model, which is a leadership development tool for supply chain professionals. So this being said, this panel is for you all to find out what's going on in different parts of the world. I will leave you to Shub in her good hands to introduce you to the panel, ask questions, and have a great, great event. Shub, over to you.
Thank you very much for the introduction, Radu, and welcome everyone for today's panel. My name is Shub. I'm the head of learning solutions for Alcott Global, and today's panel is on overcoming recession and inflation challenges in supply chain. We really want to add value to you, so this is a live panel. Please type in your questions. Our panelists will take on the questions as we speak and try to help you as much as possible to overcome the challenges. We are all learning together, so let's have a lot of fun and interaction in the next 45 minutes or so. And now let me introduce the panelists to you. So our first panelist is Anne-Sophie Zerlang-Carlson. She's the head of the new merged customer ocean logistics function of Maersk in Asia Pacific, which covers all operations across the region. She has worked for Maersk the last 2 decades and has held various leadership positions. Before this role, she was the CEO of Twill, a corporate startup which aims to build Maersk's first digital value proposition for the smallest companies in the market, as such, working to democratize trade through digital technology. Welcome to the panel, Sophie.
Thank you so much.
The next panelist is Claudio Strobel. He's the Senior Vice President Operations at Cargotec Kalmar Mobile Equipment. Claudio drives operational excellence, continuous improvement, and leads global teams to deliver outstanding business results. He also drives and leverages global sourcing and global supply chain end-to-end solutions and creates innovative business solutions and transformation initiatives. He has also worked with us very closely in creating a number of courses which can help you to upgrade your skills to deal with the supply chain challenges of today. So welcome to the panel, Claudio.
Thank you much. Appreciate to be here.
And our final panelist is Tim Drury. Tim is the Chief Supply Chain Officer at Americana Foods, one of the largest and most successful companies in the Middle East and North Africa, the MENA region, with capabilities spanning restaurant operations, manufacturing, and distribution. Before that, he has spent almost 3 decades at Unilever as a senior business and supply chain leader, generating business growth across Africa, the Middle East, and Asia. Welcome to the panel, Tim.
Hi, Shub. Hi, everybody.
All right, so let's just jump in and start getting your opinions on different things. One of the things I love about this panel is the fact that we have a diverse regional representation here with Anne-Sophie in Shanghai, Claudio in Stockholm, and Tim in Dubai. Well, right now he's in Saudi Arabia, but based in Dubai usually. So I'm very curious to understand the challenges which each of you are foreseeing in your respective supply chains. So let's start with that first. And Sophie, let's start with you in terms of the challenges for APAC, for Maersk, as well as the clients of Maersk in supply chain.
Yeah, so let me start. I think the situation in Asia Pacific and maybe globally, when I speak to what's close to home, which is ocean operation, is very much about reliability. I don't think I have to tell many people who's listening to this about the tumultuous situation in both the ocean and the air markets during the pandemic. And right now, what we're coming out of, or as we are coming out of that, and we were hoping that things would start to stabilize and we would be able to start offering our customers more stable products, actually getting reliability back into the supply chains. What we're seeing is unfortunately markets that's dropping off. And unfortunately, what then happens is that a lot of capacity is being taken out of the market. It's being taken out on an ad hoc basis, which actually generates a new type of volatility for our customers that is also extremely difficult to plan. Now, when I think about the pandemic, then we all know that when we talk about the inflation and recession, I don't have to entertain anyone about what the freight prices in both ocean and air meant for that. But in reality, when you think about supply chain cost, then I believe that more than the cost of the freight, it was in reality the waste that came with the lack of reliability and predictability due to the big clogs in the supply chains. And unfortunately, I don't think it will be as bad as what we saw, but unfortunately, it's not stabilizing as much as I would like. And so in my daily life right now, I'm obsessing about how do we in Maersk make sure that we focus on quality through this period of time. Everyone knows that during times of recession, focus on cost becomes even stronger. But we live in a world where it cannot be cost or quality. It needs to be both. So I would say that's a very big focus for me. Every day we try to find new ways to make sure to restore reliability for our customers back into their supply chains so they can remove waste. Some of the waste that they have had to live with for the last couple of years.
Thank you very much for that, Anne-Sophie. Claudio, where do you feel some of the challenges for supply chain with what we're talking about for recession and inflation?
Well, first of all, I can only concur with what Anne-Sophie is saying, right? So we are experiencing that. I think many of us thought that, 12 months ago that, hey, 2023, 2022 end, we should be all right. We should be back to normal. Well, there's no such thing as normal as it looks, right? So it looks like we're going to still hang on with this kind of erratic situation right now. And it goes a little bit up and down, as you say. Oh gosh, great, we got capacity. Oh, go, the capacity is gone again. So I think we're just in this roller coaster ride for now, and it's not stable, right? Other things that we're experiencing, this is, again, I do have a global situation here, but if I just focus on Europe, the energy price is going crazy. I actually just got my own energy bill yesterday, electricity bill. That was 400% up versus November. So this is, of course, sending shockwaves around industry, not only people in general, but industries, right? So we are now experiencing some of the smaller suppliers, they're coming into financial issues, and in general, we don't see inflation coming down. So we have a situation right now where hey, it's not a stable supply chain. On top of that, we have this energy issues and energy pricing and inflation going up, and it doesn't seem to come down, right? I don't think this is going to be a rapid fix in any way. So the question are, what are we doing over the next 6 to 12 months and beyond that? And that's some of the things that we are addressing right now, because I do feel, and I hope we're going to talk a little bit about that later, I do feel that as many other companies, we reacted quickly in 2020, 2021, but it was more quick fix things, right? Now we need to just embrace the fact that, hey, it's not going to be stable and it's going to be risk and there is war and it's not going to go away quickly. And so what do we do long term to make sure that when we actually design our stuff, early in the chain, how do we actually incorporate these things so that we can become more resistant to changes, inflation, and others? So that's the situation right now. It's not stable at all. And we see new spices coming in from right and left that, of course, are challenges to to supply chain. More challenges than easing off, I would say.
Got it. How about you, Tim? Where do you feel for MENA?
Yeah, similar sort of picture really to what the guys have been saying. I think in terms of absolute availability, if I go back, year 18 months, then yes, we had absolute availability. Can we get raw materials, packed materials, or a container in order to move stuff around? I think that side of things improved. But as Anne-Sophie was saying, the reliability of delivery times is still a challenge for us. So in terms of what does that mean for planning parameters? What does that mean for stock holdings? You've still got to be extremely careful. Rather than sort of cutting down to bare minimum in terms of your stock levels, you've got to assume somewhere along the line, some of it is going to have some disruption. I think on the inflation side, we're obviously with the Middle East, if I take the GCC, it's largely oil dominated. So in some ways, oil prices going up, we're not seeing quite so much of a recession. But then you say the flip side with inflation occurring elsewhere due to energy and, oil, then you've got a lot of imported products into the GCC. So things like food inflation would be considerable. So you're getting imported inflation despite the actual economy itself being relatively robust. If we flip over outside the GCC, somewhere like Egypt, you have quite a attrition of the value of the local currency. So say, kind of in dollars, the inflation's 10%. In Egypt, in EGP, that inflation would then translate to 20, 30%. And it's focused very much on basic commodities such as food. A lot of food into a country like Egypt comes from the basket of Europe, which is the Ukraine. Obviously, supply from Ukraine has been heavily disrupted, hence the food into Egypt and heavily disrupted. Hence, you've got hyperinflation in some areas of the Egyptian economy. Looking broader into Africa, I'm not so involved with Africa now, but having, kind of managed Africa for a long time, it will be exactly the same. You'll get some countries where you've got local inflation being sort of multiplied by the fact that the local currency is coming down relative to the dollar. And as a result, you'll get hyper local inflation.
And that's what the economists have also been saying, that the inflation is global. The recession, about 1/3 of the world will be facing recession or face recession in different areas. And we've got our first question related to that. So Faye has asked from the panelists, which regions do you feel are doing the best in dealing with recession?
Ooh, good question. Obviously, as I said, somewhere like the GCC in terms of recession, not quite so hit. Other areas of Africa, it would be. If I kind of look globally, I think, maybe, of the big economies, maybe the States is the one that's best positioned. If you look at where their central bank is, where their exchange, where their interest rates are, etc., they've managed to build themselves a little bit of a buffer. And can move interest rates up and down, and try and manage the economy a bit. Whereas I would imagine, Claudia, you can probably correct me, but somewhere like Europe, they haven't quite got the wriggle room. Kind of they've had to keep inflation relatively low to keep the interest rates low in order to keep kind of recession away.
That's very true, Tim, and I agree with you. It's probably in the States. I don't think they even have a recession in their focus right now. It's a definitely different cycle there. Not sure about China. They're sort of hovering around in between one or the others, but they have a different situation. I think the government there can affect things in different ways than perhaps in Europe and other places. But no, the wiggle room in Europe is very, very small. And I think the general consensus is that we will go into recession and probably fairly quickly so. So that's a huge concern, because again, I think some of us that were sort of in the business like 10 or 15 years ago, we remember those cycles and what can happen at that time. And the difference here is that companies here have gone through sort of the pandemic and a lot of these kind of shock waves, and they're not financially stable as they should be right now when the next swing comes around. So we just been looking through our 900 suppliers, and it's quite a big share that sort of are in potentially in jeopardy, right, as far as financial terms. And I think the governments, after spending a lot of money during the pandemic, maybe they're not so keen on spending again to sort of get things up. Rather the other way around, right? Because they want to, stress the inflation and make sure it goes down. I'm not sure how you see things in China, and Sophie.
Yeah, no, thank you so much. So firstly, I share your views very much, but I actually allow myself to be quite bullish on China, at least in comparison to what a lot of medias have been telling us the last 6 to 12 months. I think we will see a China that will move through the pandemic a lot faster and more efficiently than has been predicted. And I think we will see a China that will put the economy ahead of anything else. And you can say a lot about China, but when they put themselves, their mind on something, then very often they are able to move it. So I actually think we will see a stronger year in China than what had previously been expected. Which if you see what's happening in the Chinese stock markets and so on, that seems to be a more positive drive right now. And I can also say that when we look at, if we take global trade as a proxy for how the economies are doing, then when we look at our expectations for global trade, that at large are driven still by the large east-west trades from Asia to Europe and Asia to the US. There we're actually expecting a decline of around 2% in global trade. However, actually the trade we are expecting to come out the strongest this year is the largest trade in the world, which is the intra-Asia trade. So I actually foresee Asia coming out of this, not with flying colors and hyper growth in any way, but better than what many of us maybe expected 6 months ago, for sure.
Yeah, I that's what I've been reading as well, that Asia may be in a better position with this whole recession. Inflation, of course, will have an impact, but overall recession, Asia may come out. So let's just switch gears to see how can companies adjust their supply chain strategies to mitigate the impacts of recession and inflation. And what I think the audience would love to hear is also concrete examples of these strategies being worked on, either in your companies or through the clients or suppliers, if you've got any insights into that. So it's open, whoever wants to take it first.
I'll have a go. I think in our area, a number of things we're looking at. Design to value, which sort of covers all areas of a product mix, I think has been essential for us in terms of mitigating inflation costs. So that's bringing, multifunction teams. We have marketing, sales, obviously supply chain, R&D, etc. Everybody, multiple times, multiple forums, lots of different stimulus materials, because, you have one round of trying to reduce costs, maintain the value to either the customer, the retailer, or the end consumer, and then you have to go again, bringing in different ideas from different different areas within our business to help one another generate savings ideas. Again, very specifically, we're looking at localization of materials. So if you have a, I'll use the Egypt example, but it would go for many countries where you have a currency that is devaluing against a, hard currency basket of, the UK pound, US dollar or whatever, and you're importing from those countries. If you can localize your supply, then quite obviously you get a much, much bigger improvement, because you are, you're mitigating any future devaluation that could happen, and we're potentially looking at in a number of our geographies. And then I think the last thing is, if you've got the potential for exports, then at that point you can export, and you're getting then hard dollars back as a currency. So where have you got export opportunities from, the countries that you're managing? Can you then bring in hard currency to the country? There'd be sort of three things I could think of.
Mm-hmm. And Anne-Sophie, Claudio, do you have anything to add here? Anne-Sophie.
Yeah, I think I think one of the things when we in Maersk right now are thinking about how to help our customers get through this, we're quite obsessed about how to help our customers create something as sounds trade, but agility in their supply chains. Agility in terms of during a recession, obviously it's very much around removing waste in your supply chain. It is about cost, but it is also about lost sales, right? And we are thinking a lot about how to deal with a slowing demand combined with this volatility that we all spoke to before. And one way of trying to do this is about creating the ability for our customers to actually being able to speed up and slow down their supply chains, both by creating networks where you're able to do that. It could be to allow customers to stop cargo in certain ports and send out from there faster and change destinations. But it could also very much be around trying to offer customers the opportunity to change mode of transportation. So you actually can interchange between shipping or air. So this is some of the things that we're trying to experiment with and trying to build right now in Maersk. And I truly believe reliability is a very big thing in any supply chain. But in reality, this flexibility, I think that could really be a game changer. It's something that's very, very difficult to get today. The day you closed or the minute you closed the doors of a container and booked it on a ship, it's very difficult to make a change. And trying to build that capability, I think, could be a game changer. So we're working very hard together with some of our customers to try to deliver that, because I believe it will be able to fight also this, or enable our customers to deal with the volatility of the current market.
And Sophie, we have a question from the audience, which is addressed to you directly. Are you seeing increase or decrease in shipment out from China? And what's your view of sea freight rates over the next 12 months?
So there's no doubt Q4 we saw a steep decline in the markets out of China, not just out of China, out of Asia, mainly driven by the US and Europe, in particular Europe. We are seeing the markets slowly. I mean, to be honest, it's a little difficult to say right now. We are right before Chinese New Year. Normally, you would have a strong peak. We have not had a strong peak. A very, very small peak. You almost need a pair of strong glasses to see it, but it's there. It's very interesting to see what happens after Chinese New Year. But there's no doubt that there's a part of this that's demand, but there's also a very large inventory correction happening right now in the markets, simply as demand fell off of a cliff in August and September. Warehouses, DCs in US and Europe, they filled up, they did it fast. So people simply stopped shipping out of China, and this it is still unknown. I'm a little careful with guessing when this will adjust. But I think we will see a market that starts picking up slowly in second quarter from where it is now. But that does not mean that it's going to go back to the entire level where we were in first half of 2022. You asked me about the freight rates. I wish I knew, but I think we're going to see freight rates. That's going to be I think it's going to be a tough run. First half. I, however, do believe that we will see a stabilizing market in second half of 2023.
Well, thank you for that. And I'm going to go back to Claudio for the original question, which is around, how companies are adjusting their supply chain strategies to mitigate the impact of recession and inflation.
Yeah, what we've done, as I mentioned before, I think we, as many other companies, have been chasing our tails because we sort of try to not do things right from the start, but try to catch up with all the issues that has been. I think we're slowly now coming to the insight that, hey, we need to adopt a few things from the very start of things, right? So with all the new designs and everything, we need to bear supply chain and resilience and inflation with us, right? And in some cases, we're stitched in. I mean, we've designed things with one supplier only. and that needs to change, right? And we've changed it sort of ad hoc, but that needs to go in much more sort of strategically into this. We're also, I think another trend is that we're looking at, the factories and doing a proximity analysis. What parts do we want to be sourcing from closer proximity versus out? And when you do this, further out analysis, should we then complete that or add that to a dual source? Right. So at least it's a thought through process where we say, hey, these things we should shoot it in closer to our factories, and the others, yes, as further out you get, you're going to need dual source and things. And the third dimension to that is trying to identify what categories are in risk or will be in risk, either first tier, second tier, third tier. We're not out of the electronic crunch yet. We still see that. I mean, it's still going to be there. And we see other commodities coming into that. So as far as supply chain, we're still running after those crazy balls, right? But I think we need to sort of take a step back and start to do things right. This volatility is going to be there for the next 3 years, I'm sure. So with that in mind, and maybe longer, we need to take a step back and, okay, the firefighters, they need to do their thing. But as far as fire prevention, we need to take one step back and say, okay, how do we get out of this? And as Anne-Sophie is saying, hey, freight's up and down, but there is also capacity adjustments and everything. These things will be there. How do we deal with that? Well, of course, the best thing is to try to mitigate that and not having to sort of depend on that. So I think in that whole thing, I think taking one step back and looking at your overall and deciding how do you want to play this? What are your risks? How do you want to do this? I think that's an important factor. The second important factor is that planning is going to be much more critical, right? We need, the best way of avoiding inflation is if you don't need to buy it, don't buy it, right? So making sure that planning and forecasting is really right and more accurate, and sometimes even using demand shaping to sort of help your customers in that sense. So I think planning and demand side of the planning is going to be a lot more important going forward to help everyone in the process. And that means that we need to also open up to our parties like Maersk and the others and be more integrated when we show our plans. So I think that's what we're trying to do, integrate, but also take a step back and be more clever about things.
And that's the issue with demand planning. For a lot of companies, there's no way of knowing whether they are accurate or not until it's a bit too late. And if I were to focus on the specific challenges which I think all the panelists covered, and Anne-Sophie mentioned about it as well, when the consumer demand falls, so the companies are going to have to adapt to the changes in consumer demand and buying patterns during recession and inflation, and those things are going to change massively. So how can companies quickly adapt to those things as well and not have a lot of inventory or go in a case of the product not being available?
Well, I'm going to leave it to the rest of my panelists here, but I'm convinced that one way that works is that we need to work a lot more integrated, right? So we need to work a lot more collaborative with our customers and a lot collaborative with our suppliers. And I think that we're just too far away. And we came out fairly well through the pandemic, and that was because we sort of opened up collaboration. We had suppliers participating in our SNOP meetings, and we had some of our customers part of that. I think that's the only way, and we need to be able to sort of integrate and open up a little bit more so that we share that information, so all parties have more or less at least the vital information that they need to make a just decision, right? And if we do it well, then you can use techniques like demand sensing, right? Whatever, we can't get that part, but our supplier can get that. Okay, so then we sort of put that into our configurator and have our customers ordering that to a good price or something. So I think collaboration is at least one piece that I think needs to be there to take further steps.
Tim, anything from your side?
Yeah, I think we've got to work very closely with commercial teams, marketing teams to look at changes in things like shopper trends. Where are people shopping? So are they trading down, going sort of down market rather than supermarkets, or are they going into supermarkets? and what are the pack sizes people are buying, because it does tend to change depending on sort of what's happening with consumers. So, you know, some consumers are buying to their just availability of cash. So are they buying more, you know, kind of buying more frequently, or are they only buying at the end of the month, you know? And as a result of these sorts of trends, you then have to look at when you're doing your promotional plans and how you're doing your promotional plans to reflect, you know, as I said, all these different changes in how consumers are mitigating the increase in cost to them.
Mm-hmm.
I think there is also a situation where, I mean, in this, when you have this kind of inflation recession, we know the customer patterns changes, but we also know what they're receptive to.
Mm-hmm.
And of course, you know, maybe luxury is not what they're going for. Maybe there is, you know, something else, right? So I think the good side is that at this point, you actually can affect, you can impact, I should say, the customer preference if you do it the right way. So they're very receptive to certain signals, right? And I think we need to be on top of that from a supply chain point of view, and be able to work very closely to our sales, right? Because in the end, we don't just want to have a placed order. That's nice, but we want to deliver and get the invoicing done and a happy customer in the end, right?
Yeah, it's, you know, it just means you have to really focus on multifunctional approach, both with sales and with the marketing teams, getting the consumer insights from the marketing team and the customer insights from the sales teams, you know, and then adapt and develop the products accordingly. As I say, whether it's changing pack size or the point Claudio's making, where you have to fundamentally look at the product and maybe change the product to fit what the consumer can afford now.
And anything to add on from your side, Anne-Sophie?
No, I was just sitting thinking. So I love what Tim and Claudia just said, and I'm sitting thinking, you know, normally when we have in a panel like this, I'm pretty sure that when we have such a conversation, someone would say technology. There's no doubt that that there's a hope, you know, I think in the world in general, that someday technology will be able to actually do demand forecasting. I'm, however, in I think the corner, Claudia, with you. To my knowledge, you know, even as someone like Amazon are not, they are probably more successful than anyone in the shipping industry, but not entirely successful in actually being able to use technology to do this. I don't think it exists today, and I'm not saying that we shouldn't, you know, invest in it. But I actually think when I'm thinking about technology, I would start somewhere else. Claudio, I subscribe to what you just said, and also actually, Tim, what you were saying, this thing with working much closer together, whether it is across functions within your own arena, but definitely together with your partners, right? And I think for us in Maersk, it's so important to work very, very close together with our customers, to share what we see in the market, to understand what our customers are expecting, so we, as much as at all possible, can adjust accordingly. And I think if we lived in a world where we did that, not a little, but a lot more, I think probably that's the best hope to try to get more clarity and information, and that you can actually rely and act on. But I also have been sitting thinking this thing with the markets that are ever changing. You know, the industry I work in have invented this term. Anyone who reads shipping media will know that we have the last 2 years been talking about normalization. So we have all been sitting thinking that waiting for things to go back to normal, which is in reality the worst term that our industry has ever come up with, because I am also a firm subscriber in that there is no more normal. Normal is dead. We're never going back to how things looked in 2019. We're only going into new strange scenarios, and it will become more and more volatile. So I think it's all about trying to think that into how you actually build your business, and think about how you can isolate. You can say the more modular you can say you can create networks, the more diversified you are, so you don't have dependencies on whether that's one location for sourcing or markets for sales. I think the better.
Absolutely. And Anne-Sophie, I'm going to take on the cue which you mentioned. Technology hasn't been mentioned too much in this panel, so I would love to know what investments in technology or automation have been made to improve supply chain efficiency and reduce costs in preparation of the coming economic downturn in your respective companies or for your clients?
Yeah, what we've been doing is reaching out to our major machine suppliers and working with them on, kind of their latest innovations with their machines and how that can help us with regard to process improvements, whether that's utility reduction, waste reduction, kind of changes in the performance of the product. And same on the packaging side. What can we do with the packaging machine suppliers to improve the packaging solutions we have, and working with our packaging material suppliers and their technology, different substrates, on the flexible side, to see what we can do to reduce costs and still provide, kind of products that have got the right shelf life and everything else for the consumers.
Fantastic. Claudio and Sophie.
Yeah, I mean, like everyone else, I think, when these things happen with inflation and also the volatility, everyone starts to cost down activities, right? But so that's also going on in VA and VE, value engineering. But again, as I said before, it's a little bit of, running after your tail, right? So I think what we're trying to, and I think what many companies are looking at is, try to get that in already from design start. And involve people. It's very common. I work predominantly in the automotive sector, and already there we have a lot of suppliers in when you actually design your products. But I think we need to do more than that, and I think it would be a good idea to have sort of people from Maersk and transportation on packaging in at the same time, right? I love what the IKEA is doing with the flat packaging, right? And despite they've had it for 50 years, no one has copied it yet. And I think there's a lot of things we can do there. And I think going into the design phase where you actually buy yourself a lot more options how you design things, and more than 50% of a product's cost comes in the design phase, right? So it's kind of fair to say that we should be there together with supply chain and sourcing, not only trying to find a cheaper source, but putting in things like dual source, regional sourcing, transportation. And I've seen a number of different things that we used to do is we always calculate normal freight, but there's nothing called normal freight, right? It's like Anne-Sophie saying, hey, there's going to be a time when we fly a lot, where's that in the calculation? So these things are definitely stones that you can turn right now when we're turning. And there's money in that. And I think working together with our transportation companies, there are piles of money and sustainability targets that we can do together. But in the end, we need to talk together. We need to get closer to each other. So we try to, in the latest transformation, we try to leverage IBP, which is an extension of sales and operation planning, into collaborative business planning, meaning we take the IBP, but we also involve our top 5 biggest customers or dealers and our top 5 biggest suppliers, and have those on a sort of our monthly phase when we run this. They're part of it. And then we can discuss, okay, can we actually do this can we take these orders? What is the lead times? How's your capacity? Those discussions are having sort of first up, with the horse itself, right? So we can actually, by doing that, we're helping ourselves, but we're also helping our partners. And in case like Maersk, hey, they can see exactly what kind of tenders we have for our equipment, and do we have capacity or not? It's better to know that up front than to take the hit later on, right? So again, it's going to be some hard discussions, but again, it's going to help us be more straightforward to our customers.
That's a fantastic example. That's a very good example, Claudio. Thank you for sharing that. And Sophie.
Yeah, I think when we talk about technology, right, then these days, everyone's talking about AI, ML, and ChatGPT and so on. But to be honest, when I think about supply chains, and maybe especially transportation, something that's not as much a buzz as it was a few years ago, but I very much believe in the untapped potential of IoT. And so Maersk, this is just one example, right? But when we think about food supply chains or cold chains, then this idea of investing in IoT that will actually give you visibility to what's going on within the container. So if it's fruit, how's the fruit actually doing? How has it been stored? How has it been treated? Which actually enables you to be able to predict quite a lot in terms of quality. But on top of that, if you can also think that a little out, then actually with IoT you will be able to Maersk has a product today where you are able to control the oxygen levels in a container, so you actually can control the maturity of the fruit during transportation. Things like this, which is actually, technology wise today, it's not like the most refined thing there is, but I believe that we have hugely underinvested in this as an industry, and I really hope that we will see a lot more in investments in IoT and transportation, especially the asset providers in the years to come, because I firmly believe that there's a lot of efficiencies that can be gained from our customer side through that. So that's one thing. The next thing is something that's also, it kind of should be table stakes, but unfortunately it's not. It's about visibility. That there still is no offering in the market, right, that provides you with visibility from end to end in a supply chain. And if it exists, then it is at it's not at all the levels, right? Then because you actually need it not on a container level, you need it probably at a SKU level, right? And this is in reality, I think this is not something I don't believe a single person or so can do it. But if you look in the venture markets and where the investments really have been made during the high times of the last years, I believe there's quite some players that's coming out there. And I think if you're asking me where companies could invest, it could be to subscriptions to some of these things, be Project 44 or whatever, to try to actually take a look at what kind of visibility can I actually get with technology that's out there, so you don't have to start from scratch yourself. So I'm a big dreamer for our industry. I hope that soon we will actually get to a place where visibility is not something we dream about, because in reality we should be talking about predictability today, not visibility, but we're just not there yet. So IoT and visibility are two big things that I hope for, and that I also believe that a lot of customers would be able to benefit a lot from looking more into.
That's interesting for me, because sorry Claudia, because we do a lot of fruit exporting, so I'll be in touch to find out how I can monitor my container with your technical solutions. No, that'd be excellent.
I completely agree with both of my friends here, and the way I see it is that technology is there, and we actually implemented full visibility on SKU level, but that's only when you sort of hit the ground, right? As long as when it's out at sea, there's no way. And my company that I'm working for just recently is doing all the container moving stuff, right? So we do all the vehicles that moves the container once they get into shore. But hey, if it's on the ground, if it's in a truck, we can trace it. But the difficulty is to get so technology is there, and it's not very expensive. It's to get all the parties joining up to that standard, right? So you need to talk to as many transport guys that you need to talk to all the suppliers, and so it becomes a big thing rather than to say, hey, here's a format, here's the standards. Is everyone in the world would use that, guys? We would basically rock, right? But it still waits for that. Technology is cheap. The systems are there, but we need to get all the parties actually joining up to that, right? As long as we can slam on that kind of, RFID, whatever we use, let's say from a supplier, and then transportation guys takes on and blah, blah, then we can do that. And it's been there for a while, and it's actually affordable. It's just that it's a big, try to get 2,000, 3,000, 4,000 suppliers to join in, maybe 100 transport companies and their customers. So it's a big thing, but it's definitely doable, right? And again, we don't need to do all of that. What we started to do is let's take the 80-20, and that took us a long way.
All right, so I'm getting a lot of great feedback from the audience, a lot of comments on how it's well said, very authentic response, how it's spot on the lack of end-to-end visibility at different product levels. And we also have a very interesting question from the audience on sustainability. So the question is, how will recession and inflation impact companies' sustainability goals? And what are the potential challenges in this economic downturn for sustainability? So, Anne-Sophie, let's start with you, since you're very closely involved with sustainability for Maersk.
Yeah, so let me be the optimist here. I don't think it will, at least not. I should specify, at least not in when we talk transportation. I think when if you talk about the shipping industry, but also warehousing, I actually think, again, the assets across the supply chain, there's no turning back. And it's not only, at least because of the do-gooder mentality of those who own and control the assets. It is simply because this will quickly become table stakes. And the ones who are not able to deliver sustainable green solutions to their customers will lose in the future. And I think that is very clear. So whether you're being pushed in a direction because of the regulations that's coming in many places, or whether you're doing it for a commercial strategy long term, or whether you're doing it because you think it's the right thing, I think those three things are there to stay. And especially because a lot of these are actually long-term investments. So I guess there can be a question as to whether it will slow down in pace a little bit. Maybe, but with that being said, I have to say, I know how big the push is in maybe especially Europe, but I can also say I'm sitting here in China where finding ways of doing things in a sustainable way are becoming more and more of a topic that comes from the population, but also very much for the government. I believe that this is it's something that it will become table stakes, and I don't believe that, again, what I hope it will be a blip in the history of economy will stop.
Right. Well, very positive outlook, and hopefully it remains that way. Claudio, your thoughts?
Well, I'm of course in favor of this. Well, let's try to save our planet. But whether you are pro or against sustainability doesn't really matter here, because the people has decided, the customers have decided. So you will not find whole countries or masses of customers who decide, yeah, let's not go sustainable. The world is going sustainable. We need to do it. There's ways. Take the advantage right now. We've invested quite a lot in solar panels on factories and things like that to sort of offset a lot of these inflationary things with energy. And I think that's an investment that are looking better and better every day. Because of obvious reasons with the energy prices, but also packaging and recyclable packaging or reusable packaging, things like that. You actually get a huge payoff very quickly, and you support sustainability. So this is the moment right now when inflation is going crazy, to look at your processes, look at all these things, change them now. In most cases, the ROI looks pretty nice now because of inflation, right? So do it now, get money out, make it lighter, make it better, make it recyclable. Let's not get passive in this. Let's take it and run with it, and come out on top of things, right? That's what we do in supply chain. Hey, if you get a bunch of lemons, you make lemonade. So let's do it.
Fantastic. Tim?
Yeah, same really. There'll be some areas that will slow down, but other areas that will speed up. So if you take something like utilities, huge pressure on everybody in terms of energy costs going up, which means everybody redoubles their efforts to look for energy reduction. We're putting in a big investment in one of our can bean plants in the UAE to reduce our utilities. This is both water and electricity. Now, when we started the project, you've got a certain amount of payback. Now, with the increase in energy costs, etc., the payback's looking even better. So I think the pressure on reducing utilities, reducing energy is going to increase. Then, as Claudio's saying, if you look at value engineering, he mentioned earlier, or design to value, effectively the same sort of project. You're looking to reduce your your packaging in order to provide more value for the consumer and reduce costs overall. Obviously, what does that do? That reduces overall packaging consumption. Therefore, it's also part of the sustainability agenda. So I think there'll be, as I say, areas that will accelerate, maybe some areas of compromise, but overall, kind of, as everybody's saying, the momentum is there and we're only going to go in one direction.
Right. So look, I love the discussion here, but I'm also mindful of the time. So we need to move to closing comments. We do have some questions, but I think we'll pin them for later. So if we could have a quick round of closing comments, maybe your top prioritizing which you are thinking for overcoming inflation and recession challenges within your role, that would be fantastic. So quick 15 to 30 seconds closing comments from all the panelists. Let's start with Anne-Sophie.
Thank you so much. No, as I think I've said, I'm obsessed about reliability, how to get back to actually deliver this to our customers. I believe that is what is needed right now. But next to that, delivering and developing new products that actually enables our customers to have more nimbleness and more agility in their supply chains. That's what it's all about for the recession we're facing right now, but for the new world we live in where volatility is enormous.
Right, fantastic. Claudio.
I would say, again, invite your biggest supplier, invite your biggest customers, bring them to the same table, see what you guys can do to help each other, rank your top 5 that's going to be good for all 3 parties. I'm sure there's a lot of good information. I mean, it's all about perspectives. We have the same issues, but we see them from different ways. And typically when you bring parties together, good things happen, right? So that's number 1. I know that there is quick fix, packaging, transportation, huge money that company hasn't looked too much into it. Again, bring in your parties and find the money there. And then I as a last thing, I would say, this is here to stay. So we need to quickly realize that, as you say, Anne-Sophie, this is the normal, right? It's not going to be calmer, right? And that's probably a good thing for our supply guy. That's job assurance for us all, right? But we need to sort of deal with the fact that the changes here. Let's not ride it out. Let's just be agile with it. That's the way to overcome it.
Right. And Tim, your closing comments.
Yeah, I think, sort of collaborating with our, as I say, marketing and customer teams to check on what the consumers and our customers are up to. What do they need? What are their changing habits? What are the changing products that we need to do? Lead that into any design to value projects that you've got going. And then finally, one area potentially we haven't really talked about is on the procurement side of things. Look globally for opportunities where, countries have changed exchange rates, whatever it may be. You can, potentially find value out there from switching your source from one country to another.
All right, fantastic. Thank you very much for this wonderful conversation. I hope our audience got a lot of value out of it. I for sure got a lot of value and learned a lot from this conversation. So thank you very much, Anne-Sophie, Claudio, and Tim. To our audience, please do follow our panelists for more insights. A couple of them are very, very active on LinkedIn as well. So you may learn along the journey of inflation and recession this year. Also, to help people to fight with the challenges coming in supply chain for this year, we have launched a few more courses on the Alcott Global Supply Chain Academy today. And 25% of those courses are about cost savings, total landed cost, working capital management, because we wanted to focus on the challenge for this year. So hopefully you will find some value out of those courses as well. Thank you very much for your interaction, asking very good questions from our panelists and making sure that the panel is lively and engaged. Have a great evening, everyone.
Thanks much. Have a good one.
Cheerio. Bye-bye. Thanks.